10 things you need to know about this year's taxes before you go filing. Want to know what they are? Well, stick around. All of that coming back. Stay tuned. Number 1, personal expenditures. You can no longer deduct yourself, spouse, or any dependent. Last year's personal expenditure provided $4,050 in taxes of deduction. That was a big help, especially if you have a big family. For an example, let's say your family of 4. That means you could have deducted $16,200. That's in addition to any other standards that you had to deduct. That loss of this deduction greatly minimizes the tax benefit. Number 2, alimony. Alimonies that are required by divorce or separation, decrees, or agreements that are executed after December 31st, 2018 are not deductible. Here's a fun fact. This year's tax form will not include in the taxable income. Now, taxpayers who are divorced before December 31st, 2018 will continue to deduct or report alimony payments. Number 3, non-military job-related moving expenses. Job-related moving expenses that are paid by employees are not deductible. Only active duty military personnel who move due to new orders or assignments can claim activity as an adjustment. So if you're not active, you have to come out of your own pocket. But there is still hope, as a new law that was implemented for the employees who are paying for non-military moving expenses will now be included in tax wages. That goes along with any tips or any other compensation that you may claim for. Number 4, home equity loan interest. You can claim an itemized deduction for your home mortgage interest or acquisitions of debt. This debt secured by home and use to buy or subsidize or to improve it, you can claim up to $750,000 in principal. $375,000 if you're married but you're filing divorce. But this goes for home purchases made after December 15th, 2017. It is important to keep track of all your bills and all your debt on your equity moving forward. So this way you have the original of your purchase and everything else, so in case when you come in to do your taxes. Number 5, theft loss. Personal theft loss can no longer be deducted under the new law and under Section A. Number 6, casualty loss not from a disaster declared by the president. How do you like your president now? Only a taxpayer who suffers a personal casualty loss from a disaster declared by the president will be able to claim a personal casualty loss of any itemized deduction. This policy is subject to $100 for casualty and with 10% of AIG limitation. Now you can see why both parties are not in no rush to really impeach this guy. Number 7, employee business expenses. Now this goes out to all you entrepreneurs out there. The none of this miscellaneous expenses that were subject to a 2% AIG exclusives are deductible on Section A. Employees business expenses that haven't been reimbursed are the most potentials in this category. Number 8, investment expenses. Investment expenses are no longer deductible as a miscellaneous expense under Section A. These include custodials and maintenance fees for investments and retirement account fees for collections, dividends and interest fees paid to investments, advisors, or anything else that you're paying for as far as the media services and safety deposit box, rental fees. None of this is deductible. Number 9, tax preparation fees. This one is self-explanatory. You can't write off your tax fees anymore. Number 10. Legal fees paid on an award, a judgment, or settlement. Legal fees related to an award, judgment, or settlement for a claim of unlawful discrimination or a deduction as adjustment to income to on the 1040 form, reducing adjustment gross income, legal fees related to other taxable awards, judgments, or settlements which were previously allowed or allowable as miscellaneous expenses under the Section A are no longer deductible on the 1040 form. For example, if you were awarded a settlement of, let's say, $100,000 and your attorney fees received $30,000 of that, well, under the new federal law income, you are required to pay the full $100,000. So you're not going to be paying $70,000 on that, on what was claimed on what you receive afterwards from what your lawyer's fee. You're actually paying the full $100,000. So these are the new tax laws, and these are the new things that you can look forward to when you're go ahead to do your taxes. Congratulations. Now, the IRS also has released for the American people a statement stating that they are going to be open and they are going to be accepting taxes, tax forms coming in, but they require that you guys, they prefer, let's put it that way, they prefer for you guys to do it electronically. So this way they can, I guess, process it a little bit faster and do whatever they got to do. Those that do it manually and just mail it out, well, these people are going to have to wait a little bit much longer than the prior 6 weeks or whatever it is that it takes for you guys to get it when you do it that way. I don't even know who does that anymore that way. But anyway, for those that are the old-fashioned way, you might have to wait more than 6 weeks. For the new people that do it electronically and stuff like that, well, for that reason, I don't know how fast you're going to get it. They haven't said anything about that as far, but as we get the information, we'll be filtering that information down to you guys. So this way you can be more aware of what's going on right now. But for right now, the IRS department is saying that they will honor tax forms and they will process tax form, even though the government is in a shutdown. So hopefully it won't be that long after you get your taxes, and hopefully they don't make any mistakes, and then for the following year they'll let you know that, hey, you know what, we overpaid you and we have to go ahead and take some of that money back. Look for those scams. Even the IRS do scams on the American people, so keep aware of what's going on. Don't rush too fast to go do your taxes. If the government opens up from here to then that's fantastic. But my advice to you guys out there is to wait until the government opens up and then file your taxes. Don't be in a rush to file your taxes before the government opens up. Like I said, there can be a lot of clerk errors in this, and that can cost you a lot of money coming in to the following year. So it's just a little warning, and it's just us being precautious out here and letting you guys know that, you know what, take your time, do it right. There's no rush to it. All right? You have all the way up to April 15th to file for taxes. So hopefully by then the government has already opened up and it can be processed correctly with no errors, and therefore you won't have to fall into those traps. So again, guys, if you have any comments or any questions concerning this topic or any other topics, or if you'd like us to bring a topic up to light as far as to something that maybe you don't know and would like to know about the topic, please leave it at the comment section below. And as always, guys, don't forget, keep your eyes on the prize and don't lose that eye from that prize, because when you take your eyes from the prize, you lose. So more gains, more gains, more gains, giving it your maximum effort. Peace out.